gentlemen, good day and welcome to SMS Pharmaceuticals Limited Q2 and H1 FY2026 earnings conference call. This conference may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as of the date of this time. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today we have with us Mr. Vamsi Krishna Potluri, Executive Director, Mr. Lakshmi Narayana Thamminidi, Chief of Financial Officer, Mr. Thirumalesh Thumma, Company Secretary and Compliance Officer. I now hand the conference over to Mr. Vamsi Krishna Potluri, Executive Director. Thank you and over to you, sir.
Good morning, everyone, and thank you for joining us on today's call. We appreciate your continued interest in SMS Pharma and the time you've taken to be with us this afternoon. I trust you had a chance to review our financial results and other investor materials uploaded to the stock exchanges and our website earlier. I'm happy to share that we've delivered another strong quarter. Our PAT grew 80% year-on-year to 25.3 crores, the highest ever in a single quarter, the strong revenue growth and margin expansion. The performance reflects our continued focus on product mix, optimization, backward integration, and achieving economies of scale. One of the key drivers of our performance this quarter has been the backward integration projects that we commissioned in the previous quarters. Operations across key intermediates have now stabilized and utilization levels have improved significantly. Let me take a moment to talk about our backward integration model because it is central to our long-term strategy. Over the past 12 to 18 months, we've invested close to 150 crores to build in-house capabilities for critical intermediates across our API portfolio. This investment strengthens our cost competitiveness, improves supply chain reliability, and ensures consistent quality. Importantly, it reduces the dependency on external suppliers, particularly from China, giving us better control over input costs and delivery timelines. In today's environment, where global customers are actively seeking dependable non-Chinese source, our backward integration capabilities provide SMS a distinct and sustainable advantage. It has strengthened our value proposition to existing customers and is helping us expand our customer base in regulated markets. Alongside backward integration, R&D has been a key pillar of strength. Our R&D has delivered strong outcomes over the past few years with successful product launches that continue to see a strong demand and an expanding presence in regulated market. A good example of how R&D translates into value creation is our joint venture with Chemo, a leading Spanish multinational. Through this collaboration, we leveraged our R&D strength to develop, scale up and manufacture first-to-market APIs, while Chemo drives sales and marketing across Europe and other regulated markets. This partnership has already yielded significant success in the anti-diabetic segment, where we were first to market in Europe and established a leading position. We are strengthening this capability further with a dedicated team of over 100 scientists today. We plan to double our R&D strength over the next 2 years. To date, we have filed over 120 DMFs and aim to add around another 30 more in the next 24 to 30 months. Moving on to our financial performance, in Q2 FY26, revenue grew 23% year-on-year to 242.4 crores, supported by strong demand and market share gains across key APIs. For the first half of FY26, revenue from operations reached 438.4 crores, reflecting a 21% year-on-year growth. Gross profit rose 30% year-on-year to 76.8 crores, with margins improving to 32%, driven by backward integration, product mix, economies of scale, and stable pricing environment. EBITDA for the quarter stood at 48.3 crores, up 54% year-on-year, with margin expanding to 20%. PAT for Q2 was 25.3 crores, up 80% from last year, with margins at 10%. For the first half of FY26, PAT grew 50% year-on-year to 45.8 crores, supported by higher volumes, improved margins, and lower financial cost. Let me now touch upon our segmental performance. We continue to maintain a balanced and diversified product mix across therapeutic areas. Anti-inflammatory and ERV segments remain key growth drivers, while anti-diabetic products are largest therapeutic category, which also recorded steady growth. Our segments such as anti-epileptic, anti-erectile dysfunction, and emerging molecules have showed healthy traction. Our largest therapeutic category together accounted for only 24% of the revenue from operations, underscoring our focus on maintaining a diversified product portfolio. Now, coming over to an update on our CapEx. As mentioned earlier, we've commenced our 280 crore new CapEx program. It remains on track for completion by November 2026. It will enhance capacities for existing APIs and build capacities for new product pipeline. This includes a 30 crore outlay for acquiring land for a greenfield project. Investments have also begun in R&D for the peptide initiatives, with commercial operations targeted to begin in FY29. Together, these initiatives provide a clear path for growth over the next 24 to 30 months. We enter the second half of FY26 with a strong momentum. Our priorities remain clear: maintaining growth across key APIs, improving profitability through backward integration and scale, and driving further diversification with our business. We are confident of achieving our FY26 targets of around 20% growth and 20% EBITDA margins. This translates into a net asset turnover of 1.5x, among the best in the industry. Our growth will continue to be driven by the completed backward integration, strong R&D capabilities, advanced plant engineering, diversified product portfolio, and price stabilization in key APIs. Thank you. We are now ready to answer any questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the team. I have two questions. As more players enter the API and CRAMS space, what is SMS Pharma doing to build a strong edge, not just through approvals or capacity, but something more deeper, like a way of working or thinking that grows over the time and makes it hard for your competitors to copy your model? Thank you. That's my first question. I'll ask the second question later.
Sure. Thank you. So again, SMS Pharma has been in the market.
Ladies and gentlemen, the management line has been disconnected. Please hold while we quickly get them reconnected.
Hello?
Hello.
Yes, is the call still on?
Yes. The management line has been connected.
Okay, thank you.
Hello? Yeah, sorry, I think the line got dropped. Yeah, so just to answer to the previous question, so the competitive advantages are like SMS has been in the market since almost 30 years, and we have some very strong APIs which we are having a global position, global leading position. I think the reason we were able to achieve that status was because of our backward integration, non-dependency on external sources, and most of the APIs we are vertically integrated, and strength on manufacturing and the cost competitiveness of the product. I think this is what separates SMS in some products compared to our competitors, and definitely going forward we would like to add more products to this category and remain more competitive going forward. This probably is our biggest strength here.
Thank you. My last question is about margins and cost planning. When API prices come under pressure or costs go up, how do you make sure the balance sheet stays stable and doesn't slip? Just curious to know if there is anything in your planning, like sourcing, process tweaks, or any tech that is helping the company stay efficient without cutting any corners.
So definitely, I think coming to margin improvements, as you see, I think though we are doing a capex expansion, our ROCs have been quite well established. And since last quarters, if you monitored, it's been increasing. Our EBITDA margins and EBITDA numbers are also being improved. The only reason why it's being improved is because of backward integration and definitely tweaking in process and making sure we continuously improvise the existing process to make sure the cost of the product is constantly coming down.
Ladies and gentlemen, the management line has been disconnected. Please hold while we go and quickly reconnect them. Thank you. Ladies and gentlemen, the management has connected.
Hi, apologies. I think there's some technical disturbance from our side, so I think that's being sorted out. So, yeah. So, hope I've answered the previous question, or I can repeat it if you want me to. Hello?
I think the participant has been dropped.
Okay.
The next question is from the line of Akhilesh Rawat from Siddhanta Vision Private Limited. Please go ahead.
Hello, am I audible?
Yeah, please go ahead.
First of all, congratulations on good set of numbers. So I have two questions. My first question is on capex. On the 280 crore capex plan for completion by November 2026, could you update the current progress and cash spent so far? Also, what revenue and EBITDA margin contribution do you expect in the first couple of quarters after commissioning?
Can you talk a little away from the phone? Like we are getting a lot of echo.
Wait. Yeah, so now my voice is clear?
Yeah, better, yeah.
Okay, so actually I want to ask you regarding the capex plan, which you mentioned in the investor presentation that there will be of 280 crores of capex in which will complete by November 26. So, what's the progress so far, and how much cash you have spent, and also what revenue and EBITDA margin contribution do you expect in the first couple of quarters and after commissioning?
So again, with respect to this, we've just started this project. So again, it will take 1 year for the project completion. As mentioned in my speech, I think this project that we are doing is to expand the capacity of our existing products and also to build another block for our new pipeline products coming in, and few other ancillary requirements. And also, of course, we are also purchasing land for a greenfield project as well. So this will be completed in November 26, and we are anticipating revenues coming in from FY28.
Okay. And my second question is about the customer concentration. As in H1 financial year 26, the largest customer is contributing 24%. So what visibility do you have on orders or renewables from the top 2-3 customers for H2 financial year 26, and what steps are you taking to improve receivable days and reduce the working capital cycle?
No, I think you got that wrong. It is not a single customer. What we mentioned was our largest therapeutic category accounted for 24% of the revenue, not a single customer. So it is a therapeutic category that accounted for 24% of the revenue. So what we were trying to say is we are diverse. Even a single product is not, crossing 50 or 60% contribution. So it is a diverse portfolio that we've come across. It is not a single customer.
Okay. And what about the receivable days and working capital reduction part?
Could you repeat that, please?
As your receivable days and working capital is a bit high, so what are your plans to improve them on future?
The receivables is mainly increasing because of increasing our revenue from operations, and all the receivables are in the below 120 days only.
Okay, thank you. That's it from my side, and all the best for upcoming quarters.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Survi from NV Alpha Fund Management LLP. Please go ahead.
Hi, thanks for the opportunity. So my first question is regarding the ibuprofen API. We had initially mentioned that we would be doing 5,000 tons in FY26. So firstly, are we on track, and how much of that has been done in the first half itself?
Hello, could you mention that number again, please?
You had mentioned in the earlier concourse that you will be doing 5,000 tons of ibuprofen in FY26. So how much of that has been done in H1 itself?
So 5,000 tons in the sense, an average of around 450 tons per month. So right now we are at almost around 350 tons number at this point of time, around average of around 350 tons per month, sort of a run rate.
Got it. So you think you will be able to scale it up to 450 metric tons?
Yes.
Got it. And you've also mentioned this time in the press release that 30% of gross margin improvement has happened from backward integration. So I wanted to know how much more room is there to improve this, and is the full benefit of the IBB plant has come in or is starting to come in? If you could just expand on this, please.
Yes, definitely. I think we've just started in, but typically we keep a quarter of inventory with us, right? So the project just got commercialized a couple of months back. So just at the end of the last quarter, it's been commercialized. So that that impact you will probably see in the next coming quarters.
So there is still room for gross margin improvement.
Absolutely. On that product, yes.
Got it. And this quarter, your ARV contribution has seen a good growth, and wanted to understand how that will pan out for the rest of the year. And if my understanding is correct, I'm assuming ARV is the least margin, the least margin accretive category. So do we still want to grow that category?
Yeah, so basically ARV is not least margin category. It is a moderate margin category. But again, ARV for the next 1 year, see, as you know, ARVs is tender-based, right? So based on multiple tenders awarded across the world, we have a couple of customers which sort of get this product from us. And fortunately, our customers have got the tenders, have been awarded the tenders. So going forward, I think for the next 3 quarters, we definitely see a very good visibility on the ARV front.
Got it. And just one last question, if you could expand on the anti-diabetic portfolio, right? It is not seen like a growth this quarter. If you see year on year, it's hardly grown. So where do you see that going forward?
See, on the antibiotic segment, obviously, I think the patents have expired. See, when we've launched the product a couple of years back, we were one of the largest and one of the first, and the patent has just expired, and we got a big market share. Now the patent for sitagliptin phosphate, which is another product, has also got expired. So definitely we saw more players coming in and, obviously getting some market share. But definitely we've been able to consolidate the market share that we currently have. And obviously it'll dip slightly, but I think it shouldn't be a problem. We should be able to consolidate that existing market share.
Okay. I'm done with my questions. Thank you.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, we will wait while the question queue assembles. Ladies and gentlemen, that was the last question for today. I now would like to hand the conference over to Mr. Vamsi Krishna Potluri for closing comments. Over to you, sir.
Thank you. We appreciate your continued trust and interest in SMS Pharma's journey. For any further information or clarifications, please feel free to reach out to our investor relation partner, Exponent. Wishing you a great day ahead. Thank you.
Thank you very much. On behalf of SMS Pharmaceuticals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.